Good day, it's the Market Sniper. Merry Christmas for the Christmas that passed. Great to be checking in with you again. Yes, and it's onwards and upwards to the new year, and we're going to be talking about a key trade and an update and a reminder. So, why, in spite of the dollar potentially having a pullback, the Euro-Swiss franc is probably one of the things you should be watching. Failure of the euro. First, we're going to see some failure of the euro against the franc. And then when the dollar reasserts to the upside, which it will do, but it's probably going to have a rest and pull back. When it reasserts to the upside, we're going to see the euro failing against the dollar. So there's going to be a spell where the Swiss franc is dominant as the least bad fiat in the room. And this is probably going to take place now, hence why we're talking about the Euro-Swiss franc. If you're American, why should you care about the collapse of the Euro-Swiss franc? Because in the period that the dollar rests and the euro is slipping to the dollar, but not so much because the dollar is also resting, you will soon get the spell where when the dollar reasserts, the euro will again be losing at an even bigger rate against the dollar for a period, and that we are macro bulls on the dollar as a fiat currency. By the way, that does not mean fundamentally we support the premise of the dollar and the petrodollar concept in any way. We're just saying technically how we think it's going to play out. So with a quick take on the role of the DXY, the euro and the Swiss franc in an unholy troika alliance. Who is the patsy in that threesome that's going to be the weakest consistently? And the euro is it. And first it's going to be it against the Swiss franc, then it's going to be it against the dollar, and then it's going to be it against both to varying degrees. We are calling for a euro collapse, which for those of you that are FX traders, will give some support to the dollar and see the dollar being seen as a safe haven. And it's also going to be very significant for Europeans moving into the Swiss franc and possibly other geographies as well. Here's the big macro view that we've given to you some time ago. We've called about our third call coming against the Euro-Swiss franc. The first being up top there. Let's do another color. Let's go with a pink. TG pink going into the new year. Well overran targets, and actually on this one, which is against on Saxo's data, almost made parity in that overall run. See that overperformance period and an absolute spiller, a thriller. All the way from Manila, he says, for the very first thriller Manila spiller, saying of the potential new year. It's not new year yet, but never mind, let's get it in early. Then the peg fail call, which saw the parity be well broken. Now you'll get lots of different versions as to where that low was depending on who the liquidity provider was at that point, because there wasn't much liquidity being provided. Nobody wanted it, nobody put in a bid, and it was a very difficult time. That target again overperformed to in a similar fashion to that being the first in a new trend, real overperformance, which would have seen you exit over there. If you like these concepts and principles and would like to understand how you can do it for yourself, go to the link below. Only use our links below in our YouTubes to contact us and to talk about how you can build wealth in reset times. And boy, are the reset times coming rushing towards us. Anyway, this was then a very channeled, moderated revisit to that very same peg floor. We've covered this in the other tubes. So watch the legacy ones. I don't want to spend too much time. I want to bring you into the here and now. A channel down and a weak channel up. That's the third impulse. Overall, we called that, had that been a natural free market and there'd been less central bank running around, that this would have been an exhaustive sell low, which would have been made up of essentially these two candle events, and it would have finished and found a truer value, and it would be a lot lower than it is now. But that wasn't allowed to happen, and as a result, we've continued with Ponzi and economics, and that is what we would typically call a basing ascending grind line. This is unique to our theory. Again, go to the link below should you want to understand more how we utilize these and why they are value. That is a capping descending grind, which actually is helps create the continuation pattern that we're calling. And we're calling for sub 70s. Typically we expect overperformance. I've also highlighted that this was a 2009 event that you had going into 10, because the spiller actually went into 10. We were triggered short very early. important to be early. The power and the value of being early. Do not await confirmation, as traditional technical analysis always tells you. Be early. That is your risk-reward ratio right there encapsulated. So that actually was a 2010 event, the actual spill that started throughout there and then ran all the way into the lows of 2011. We highlighted that from the 2009 break, that was mostly then following through in 2010 and part of 11, that was a 6-year wait from 2009 until you got 2015. Both were occurring at the cusp of New Year's. So I've said this before and I'm going to say it again. 6 years between here and here as an end of year Christmas party. The Swiss roll. Are Europeans going to eat the Swiss roll coming down the hill, gorging on their failing euro currency? Then 15, another 6 years brings you to 2021. That's January. The end of 2021 is here. In fact, this collapse has also, in our view, already begun. You are busy watching something happening in slow motion, but you haven't had the capitulation event, 5 stages of a breakout. First the break and the pippy down, interim small targets run, little bit of rallies, mess about, and then the stage 3, the absolute spiller if you're in a short, which is where the bulk of the money is made. 80-90% is made in the capitulation event. This one had a long bleed out with lots of interventions. The Swiss bank really needed to be taught a lesson. Every time it became liquidity provider of last resort, it could have bought a whole bunch more euros lower down. They were a little bit more circumspect here. Once they walked away from the floor, they just let it go. And they said, we can't be a buyer of last resort in this market. So how much of those lessons will there be? More likely to have a cataclysmic candle that will need to run out. And you could then buy back at spike lows, possibly as low as in the 70s, maybe sub 70s, certainly sub 80 as a great return in. This would be from our call. Let's go into the call and talk about why we're updating you on this day today. So most of you, if you've been following the channel, will know these macros. So this is the current structure. In fact, I almost prefer it on this one. This is Oanda. You are pipping right now through that basing ascending grind line. This is a leak out the bottom. Most people will associate a day like the 28th as a thin market day, but you know, the Swiss National Bank can't be too fat on their Christmas turkey and too asleep, because the bells will start ringing, the alarms will start hollering and squeaking if they allow this, which looks to me like a downside continuation pattern that is in the early stages of rolling over. And you could end up with a thriller, an absolute spiller. Will we get our capitulation event? We will highlight to you where you should have been short from. So the coverage that we started to give you was the take at 108. So 108, if you were to trade sub 70 and get, say, a 69s, all the 9s number, is an unbelievable fall in grace. You're talking about the better part of 38 off 108 all the way down to the down side. It's for crypto, my apologies, for FX, it's almost like a crypto collapse. And it is huge, and it's a big call. But we think there's plenty of nonsense that has been brewing in the Eurozone to justify that. That's a fundamental point. The technicals are showing us and giving us the geometry. So expectation early on, it's going to be a troublesome January for the euro. People are going to come in and they're going to be looking for shorts. If you want to take a look at this structure a little bit closer on the smaller time zone, that is how she looks. And for me, it is not very supportive. In fact, on this particular liquidity provider, that's Oanda, you've probably already gone a little lower than your secondary low over here. Let's have a look at it on different providers. In this instance, no, on the Saxo platform, but you will get a lot of variance. So what does this mean for the dollar? People that are dollar fans, well, so first of all, we're talking about euro weakness, but you could actually get a bit of dollar's been super dominant on the Dixie. You could actually get, in spite of the euro Swiss franc going lower, to give the euro some slack, and my assessment is all FX is controlled and manipulated by the central banking cartel. They can mood music what they want out of it. They control JP Morgan and all the other major banks, so they can decide what they buy at and what they don't buy at. But you could actually get out of this structure a little bit of an upside move for the euro against the dollar. So it's not going to be the weakest. Dollar could start the year weak to try take some pressure off the euro. Remember, there's that biaxial relationship. Good for the dollar, bad for the euro, good for the euro, bad for the dollar. This structure over here is not looking particularly sprightly for further upside, and we could have a spell on the dollar where there is weakness. This will be good for crypto fans, by the way. Go and follow our Crypto Sniper channel. We will also have on this channel live streaming today Lynn Alden as well. Don't forget to hit the alerts when you see the link being shared. On our Twitter channel, are you following That Market Sniper on Twitter, That Crypto Sniper on Twitter? Those are key Twitter followers. We'll be sharing the link later on today, and you can come and participate with one of the smartest ladies in finance, as far as I'm concerned, Lynn Alden. So this looks like it could just bleed out a little bit and have a little bit of a return move. Don't forget, we've got the dollar fans in a major structural reversal that we called some time ago, and we've been on the money with this, up, 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 up. But we pointed that this is a bit of a fatigue point. Previous legacy downside targets were over here. You bumped into it twice, and now you are resting. Let's move that out the way. That's the long run goal from trading this reversal. That is a inverted head and shoulder with a complex head. You can learn about how we do head and shoulders in a practical trading sense. That will give you the best and most accurate targets, how you deal with a complex market like FX that can be highly skittish in terms of pattern trading, where it isn't throwing up those perfect diagrams all the technical analysts draw for you. How do you practically trade real world price patterns on real price data that is not simple little sine waves and simple beautiful little diagrams for you every time? By the way, we've also reaffirmed that overall macro, we expect this to turn into a big continuation event. But first, a little bit of a possible pullback after a great run from the dollar. Don't forget, you were at around about the 89s on the DXY, and then you've just run twice into this at in and around the 96.8. You're knocking on the door of 97s. That was the downside target of the pre-stimulus first setup in a new trend that brought you all the way down. Too fast, too far, too soon. The world needs dollars. And now you're finding that that demand is coming back in after that absolute crash and smash down. That failed despite the better part of 7 trillion in a single release, plus many trillions since, and still BBB, build back better, waiting to do more. So whilst the dollar can pull back here, the longer term for ourselves is to expect that we get a target run. On balance of probabilities, we say it's slightly higher than not. In other words, we bias to the long side, but right now, that structure right there looks a bit soft. So actually, going into the new year, expectation dollar being one of the weakest, which is not a buy for the euro, but one of the weakest, which will just shore up the euro slightly, but it's going to slip against the franc. However, after any pullback and the dollar reasserting, this is going to be real pain. And this next up leg after any pullback is going to be real pain on the dollar, because as the money flows into the dollar, it's also flowing out of the euro. And we would expect both the euro Swiss franc to move very, very strongly to the downside, and the euro USD to move to the downside as well, with this dollar index chart that we're currently looking at reasserting for upside. Possible rest at the interim level at 97.5 before going on higher. This will be an interesting zone for the dollar index later when it gets up to the first inverted in a new trend and topping out, a little bit of a spike to make that target, and then there could be some relief at that point for the euro, but your euro Swiss franc will already be substantially lower. Okay, that's the update on the FX, the little satanic troika of the Bank of International Settlements, main currency for the small nation that is landlocked to the eurozone of Switzerland. and of course the European failing socialists into communist economic bloc that is slowly slipping into degeneration of fiat death, and of course the petrodollar, your old friend, the final fiat to fall that must first get stronger before dying into our new financial system. If you've enjoyed this, please share, hit the like, puppy licks, it's spelled L-I-K-E up top there, hit the licks button right now, and give us a smear, and all the best to you for the new year with your FX trading. We'll be back at you on other things, commodities, oils, gold, silver, etc. during the course of this year. We appreciate your support and we wish you all the best. Don't forget, you've got to build wealth during these times and you've got to protect wealth during these times. We specialize in the building of wealth and the protection thereof in this uniquely special reset times that we face ourselves in. The link is below. Thank you for your support. Bye for now.